Hey, Bitcoin wealth builders, welcome to episode 88 of Bitcoin Hard Talk. This is the hardest talk about the hardest form of money. We break down the news and everything that happened this week in Bitcoin, this week in macro, and this week in geopolitics as we transition to a world dominated by Bitcoin AI and central bank digital currencies. And this week, we're going to be focusing on the one big, beautiful war and surveillance bill, the bits that nobody was talking about enough relative to what is in that bill, because we have hit the next phase of command and control and surveillance. And we're going to be breaking it all down, how you protect yourself, and how we're going to be covering what happened this week in Bitcoin macro and geopolitics and relating it all within that theme. So if you have not met already, my name is Simon Dixon. I spent the last 2 decades of my life dedicated to investing money in later Bitcoin. And we're going to break down everything. So in the Bitcoin section, in part 1, we're going to be covering everything that happened this week, as well as a little bit of a breakdown around who actually owns Bitcoin. How are we doing now? Is it becoming more centralized? And what is it that we need to do? And does it actually matter anyway? We'll break that down in This Week in Bitcoin. In part 2, we're going to be covering This Week in Macro. We're going to be focusing in and honing in on the bits of the big, beautiful bill, one big, beautiful bill that passed Senate in the US this week. And we're going to be focusing on the bits that people weren't talking enough about. What is the implication on the geopolitical landscape, the macro landscape, and then the surveillance side as well, and everything that happened this week in macro. And then finally, in part 3, we're going to be doing the next phase and the next moves of the proof of weapons network. The proof of weapons network that is a debt-based Ponzi scheme that is driven by a stateless, decentralized network of war machine and banks and a debt-based Ponzi scheme. And it shapes geopolitics while everyone's focusing on the government. We're going to be breaking down everything that happened this week in geopolitics and remind ourselves of the construct of the proof of weapons network and exactly how to protect ourselves. And we got some wins this week. So sometimes it's very depressing when you see the assassinations and the massacres that are happening around the world by the proof of weapons network. But at the same time, there are some victories. So we should celebrate those victories and make sure we cover it. So without further ado, let's jump straight into Bitcoin Hard Talk, episode 88, part 1, This Week in Bitcoin. So if you haven't been following the stablecoin news, obviously in the West, it's dominated by the Genius Act and this new implementation of stablecoins, and the fact that many in the Trump administration and the technocrats and the technology companies and all of the major banks and financial institutions, they're going to be launching their stablecoins and they're going to be backed by debt, of course. Now, it's different from full reserve banking, from fractional reserve banking, because it is full reserve, but it's still backed by debt. And therefore, the rollover mechanism still exists. And in the Genius Act, it was made sure that many of the companies and the financial institutions and the technology companies aren't able to pay on the yield. So when you back a currency by debt, you receive yield from lending to the US government, for example. And the Genius Act made sure that they're not allowed to pass it on to the consumer. But my bet and my prediction is that there is at least one bank that is a major shareholder of the Federal Reserve that will have a carve out and is able to pay yield in order to get a head start and to try and get adoption of that stable coin within the Bankster network, so that it can be integrated with systems like FedNow and various other systems of the beta test of a central bank digital currency integrated with a stable coin. And I bet your bottom dollar that that bank will be none other than JP Morgan itself, the primary architect, or one of the architects at the creature of Jekyll Island in 1913, the Morgan family that created this debt-based Ponzi scheme and proof of weapons network. And when the original Morgan passed away, 80% of his estate was in the hands of other people, other architects, European banks like the Rothschild family network that have now been wrapped up into this proof of weapons network via trust companies and now consolidated into the asset managers like BlackRock, State Street, and Vanguard and public companies. We're going to be digging a little bit deeper into the proof of weapons network in part 3. But for now, Russia quietly launched a few months ago a new Russian ruby-backed stablecoin. I always say that. Was it rupee or ruple? I always get those that one wrong. Ruple, a Russian ruble-backed stablecoin. And it's called A7A5. You can look it up. It's got a website. And it's quietly moved more than about $9.3 billion in just the last 4 months. And I think it's being integrated and is used to convert essentially rubles into a stable coin. And then that stable coin is integrated into other stable coins like USDT. And so this is one of the unwritten mechanisms, because remember, the proof of weapons network is a global network. It is invested in a multipolar world. It is invested in BRICS, and its host country is the US capital market. It's more than happy to use the dollar in order to support other parts of its portfolio, because even though it's hosted in America, these large multinational financial institutions, they have no allegiance to any one country. And so therefore, if they can have a network that integrates with these stable coins and is integrated with some of these different networks, then I think those are all being beta tested right now. And really that bypasses Western sanctions to a certain degree. And it's done via some of the offshore rails. And so we don't have any type of BRICS currency at this point. But the point of de-dollarization was to have a resistance against global hegemon power, so that therefore the dollar has to retreat and then negotiate in these currency wars. And this is certainly playing out the way that it had desired, we imagined it would. And so those alternative rails are being built, and the BRICS countries are all trading with each other within these networks. And eventually, because they've created such a resistance, and Bitcoin can sit in the middle as a geopolitically neutral currency for all of these different networks to clear into, then you get a resistance and therefore more negotiation and more peace. So peaceful proof of work, which is back in the Bitcoin network, is actually, I think, starting to have its first signs of impact in terms of the negotiations that we're witnessing right now. And so while many people in the world think that this is more war than ever moving to World War III, if you've been following the money and you're a long-term listener to Bitcoin Hard Talk, you'll know that when we follow the money, that we avoided World War III, and there is a new order being set up and the final battles are being fought. We'll cover more of those of what happened this week in part 3. But anyway, it's an expected workaround, and stablecoins are starting to be used. But remember, stablecoins involve integration with banks, or they're backed by government debt. And so therefore, they're like a go-between between the fiat currency world backed by full reserve banking. There's still a debt-based Ponzi scheme, but they allow you to transact in an innocent until proven guilty system, whereas a bank account is a guilty until proven innocent system, because you can't make the transaction until the bank approves it. And that can be politicized, it can be weaponized, it can engage in censorship, and all sorts of rules and regulations are set up around that. So we look forward to tracking as the stable coins get more penetration. And we're just starting to see early signs of more of those non-dollar stable coins starting to get a bit more penetration in the world as well. At the same time, the Financial Times came out this week, and it started to talk about, we've obviously been talking about the New York Stock Exchange and all these Bitcoin treasury companies, and also the different crypto plays and stable coins. The FT said that London, basically, the listed companies, they're all pulling into Bitcoin. They're all getting involved in Bitcoin as well. And so what it does is, in a world where your pension, for example, is not caught up to the changes, and maybe you can't buy Bitcoin through your pension, they've created these mechanisms for you to be able to do it within their control structure. Now, remember, Bitcoin with them is not Bitcoin. It is a Bitcoin IOU or a Bitcoin derivative or a Bitcoin represented by a share, which is not a Bitcoin. It is only when you own your own Bitcoin. So for example, when I used to work, it's been 20 years since I was working in investment banking in the corporate world. Wow, time flies by. But in that, 20 years ago, I ended up with a bit of a legacy pension. And you get massive penalties if you cash those out early, and sometimes you can't. And so I wanted to get exposure to Bitcoin. Initially, I put it in a gold ETF. And then there was this obscure product like a Swiss franc or a Swedish krona denominated Bitcoin trust. And I was able to get exposure all the way up. And obviously, it outperformed anything the pension was doing when I moved to self-invested. But I didn't mean that pension is my whole retirement, because I kind of treat a pension in the legacy system as something that could be taken away at some point. I don't want to scare people or anything like this, but the whole point of Bitcoin is that you're able to hedge against some of the things that centralized custodians can do when integrated by a falling empire and desperate laws that are getting ever more restricted, as we are seeing right now with this big, beautiful bill. Anyway, it's saying that more and more people are piling into Bitcoin, and these public companies are giving people a way of getting exposure. My recommendation is to always focus on building your Bitcoin in self-custody. But sometimes, like me, you may have some legacy financial products that you need to play around in the TradFi world. And this is one way that people are getting exposure to that as well. Speaking of which, we're starting to see more and more tech companies that are now starting to get into the IPO market under the Trump administration. So they're looking to go public. I mean, one of the very successful ones that I invested in many, many years ago was a company called Circle that just went public, and it did incredibly well through the public offering. But one of the companies you may have heard of is a design company. If you're involved in designing tech, you probably would have heard of Figma. I know our tech team have used it at Bank to the Future. But they revealed on Tuesday that that Figma has been adding Bitcoin to its treasury. And it disclosed that its Bitcoin position is $69.5 million. It's holding it via a Bitcoin ETF. So it's held in custody via an ETF. But that's the holding now. And that accounts for approximately 4.5% of the cash and securities portfolio that the company holds. So it's interesting that these technology companies like Figma have been allocating approximately 5% of their treasury to Bitcoin or Bitcoin ETFs as part of their, and they've been doing it via securities as well. And what tends to happen is anybody that has been involved in owning more Bitcoin this month than the previous month and doing that for a minimum of 4 years, as I've been guiding people and telling people to do ever since Bitcoin was $3 in 2011, anybody that's done that, they end up with a little percentage of their portfolio in Bitcoin. And as Bitcoin historically has outperformed every asset class, every fund manager, every real estate transaction, every bond, every security, anything, every alternative investment, every private equity, every public equity, with the exception of a few, I think Nvidia might have caught up with Bitcoin in the more recent years, but not if you were there in early as well. But what tends to happen is it starts with a 5% allocation, and then as it outperforms, it becomes like a 6, 7, 8, 9, 10, and then it gets a bigger and bigger allocation. And what we're starting to see is that some people are like, wow, that Bitcoin outperformed the business. And then people are starting to really adjust to these trends, recognizing that there's lots of artificial intelligence and disruption. And we're starting to see this emergence of hard money ushering in more performance, less likely to go bankruptcy, and just a more stable, wealth-based environment than the debt-based fiat currency proof of weapons network that relies upon debt slavery, war, and violence in order to perpetuate its debt-based Ponzi scheme. So it's really interesting to see that. And they announced this ahead of their public offering. And so, this is a public company that's going to be going. It's a multi-million dollar investment. And they've been doing that for more than a year. So how many other companies are there that have been quietly holding some of their treasury in Bitcoin? And so it's going to be seeking a listing on the New York Stock Exchange. And this just adds to more and more companies. And again, I'm not recommending anybody to invest in any of these things. I think holding Bitcoin in self-custody, I think opting out of the system, I think boycotting Wall Street is the way that we can make change. But I'm just sharing how many of these companies kind of having a speculative attack and is eating the debt capital markets, is eating the equity capital markets, is eating treasury reserves, and is providing an alternative to those engaging in the debt-based Ponzi scheme. And even in the future, as the price goes up, if it continues, I can't give you financial advice. I still continue to believe it will, just based upon its fixed supply. You may end up getting Bitcoin denominated share buybacks and all sorts of constructs that are coming in. And you can bet your bottom dollar that Wall Street's all over it right now. As I said, the real game is Bitcoin in self-custody as a peaceful boycott against the proof of weapons network. And once we all do that, then the world can change. So I'm going to share some successful strategies that has actually had real impact in part 3 in the geopolitical section. But speaking of the banksters and the proof of weapons network, one by one, they're starting to realize that they need to hedge themselves and accept this reality. I remember way back in the day, I think when I used to give presentations around about 2014, we used to have proof of weapons network banksters like Blythe Masters that would go around and say, hey, Bitcoin's a scam, but the blockchain technology changes the world. And she went around across all the asset managers. And I remember Jeffrey's Investment Bank asked me to do a tour across the world, speaking to all of the capital managers and money managers that were managing much of the world. And then I was really focused on Bitcoin adoption. And I was telling them self-custody, and they were all doing it on their own, but they couldn't do it within the institutional construct. But now we're starting to see more and more of them do that. And as a result, Germany's largest bank, Deutsche Bank, is set to launch a crypto custody service in 2026, was the announcement. And this one is very symbolic for me, not the Deutsche Bank. But my last corporate career was in 2006. And I was working in the city of London for a bank called KBC. And this is when I really started studying monetary reform on the side and realized that very few people in the bank, they're just like a cog in a wheel. You know, I used to do 100 hours a week, working as hard as I can to try and climb the corporate ladder after I was molded into, you know, an investment banking machine through the university system, you know, where I was taught about Keynesian economics and debt-based systems, never taught about Austrian economics, hard money, and what you need to know in order to beat the system, and what, you know, real type of education that we teach on Bitcoin Hard Talk. But anyway, KBC is Belgium's largest bank, and it is now planning, it announced this week, to offer its retail customers that they'll be able to, through the bank, invest in Bitcoin and ETH. And it's going to be launching a new platform to do that, which is called Bolero. So it's not launching its new Bolero platform. And the idea is they want your Bitcoin. They want to charge custody fees on your Bitcoin. They want to hold your Bitcoin. They want to offer collateralized loans against your Bitcoin. And all of this infrastructure is picking up. And we, the people, need to resist against that and recognize that Bitcoin held in self-custody is how you escape the shekels of the debt-based Ponzi scheme, and you don't allow them to use your Bitcoin in order to lever it up. And we're going to have this two-tiered system: Bitcoin in custody, Bitcoin in self-custody. Now, the beautiful thing is that proof of work was designed. It doesn't matter who holds it because it's a bearer asset. You can own your own money, you can spend your own money, and you will benefit from the fixed money supply, whether you held it in custody or self-custody, and you can hedge it too. And I'm going to be putting up a blog this week with a debate that I did with some TradFi pundits, some entrepreneurs, some that were engaging in the political process, and myself, where we were debating self-custody and custody. So look out on simondixon.com in the blog section. We'll make sure we put that up so you can understand a little bit about the difference as well. But anyway, with KBC, my last corporate role at KBC, it was in the investment bank, 2006. That was when I walked away and I started giving lectures on monetary reform from all the studying that I was doing. I remember my father, he lost all of his money in the dot-com boom and bust in 2000. He went from absolutely nothing, went through World War II, went from rags, made his first £1 million, and then lost all his money in the stock market. And it was that painful experience that drove me to want to understand everything about money. So I did a master's in economics and studied through that route. Instead of going in there, I ended up working at the investment bank, greasing the machine. And by studying on the side, I was able to exit the brain conditioning of the economics textbooks, which were teaching you how to be a debt slave for the system. And it all starts at university and college, where they make you take on these loans, and I could never escape the system. Then you take your mortgage, and you take your credit card debt. And before you know it, everyone thinks you're wealthy, you got a good job, but all you're doing is paying the bank every month for all your debt, and you can never quite escape the system. And suddenly you're going into the mortgage system, and you're a debt slave for the rest of your life. That's how the system was designed. And they want people that have those jobs so that you just literally work for interest. And then you grease the inflation wheel as the debt-based Ponzi scheme requires more and more debt from individuals, corporations, and governments. And that's where the proof of weapons war concept comes through. But anyway, I started giving lectures then on monetary reform around about 2006. And as I wrote that book, Bank to the Future, Protect Your Future Before Governments Go Bust, covered Bitcoin. It was the first published book in the world to include Bitcoin. And that led me to speaking and launching the book at the first Bitcoin conference in Europe, in Prague, when Bitcoin was trading at just $3. And now today, the very same bank is now discovering Bitcoin itself. Now, I don't give a damn whether they're offering, Bitcoin financial services. I'll continue to educate people, but it just brought me back to the journey that we've shared. And even on this YouTube channel, we're about to pass 100,000 subscribers. But way back in those early days, you'll see a younger version of me, where I was going on TEDx and talking about the debt-based Ponzi scheme. Go way back to the video beginning of this YouTube. And you'll see me giving some of those early presentations, even the first Bitcoin conference as well. But it was a very symbolic journey, and it just took me back that KBC is now getting into Bitcoin as well. How the world has changed. But I will continue to warn people against that debt-based Ponzi scheme and that proof of weapons network, and give you the ability to understand why you should boycott the Fed by owning Bitcoin, why you should hold it in self-custody rather than BlackRock, because they want your Bitcoin as well. And make sure that you boycott BlackRock with self-custody and all the other parts of it. So speaking about BlackRock, let's have a little look at how they're getting on with this proof of weapons network, hedging itself by creating shares and ETF to back the proof of work network as well. So now BlackRock's revenue from the Bitcoin ETF has superseded the revenue from the S&P 500 fund. That's pretty remarkable. So the Bitcoin ETF for BlackRock became the most successful fund of all time in their ETF in terms of inflows. And now the fees that they've generated from it has superseded the largest ETF, which is the S&P 500, for those that want exposure to the top 500 companies in America, which is looking more like the Magnificent Seven with a bunch of zombie companies behind it as we transition to this world of Bitcoin AI and CBDCs. The most successful one, ironically, is Coinbase, that's gone into the S&P 500, and MicroStrategy, that's now got 600,000 Bitcoins approximately. In fact, let's look at the exact number. So BlackRock is now making more money out of the Bitcoin ETF, and you don't have to pay them. And you can own it in self-custody. But now Strategy, the most successful company in the S&P 500, maybe the only exception might be Nvidia. I need to look at the time frame because it's AI, Bitcoin, and then the traditional financial players that are going to be involved in stablecoins and CBDCs. Understand why I'm guiding everybody to be prepared for this world. That's what's eating up the capital markets, the equity capital markets, and the debt capital markets. In fact, Strategy, leveraging the debt capital markets and the equity capital markets by issuing shares to bond and corporate bond investors, has now accumulated 597,325 Bitcoin. That means probably by next week or in the next couple of weeks, MicroStrategy would have passed, or Strategy is now called, 600,000 Bitcoin. What about BlackRock itself? Now, BlackRock ETF means that it's holding Bitcoin for you, which means that, it doesn't control the Bitcoin. It's proof of work. It's not like proof of stake, where if you own the coin, you get control over the network. It's not like a share where you get a vote over the network by owning the share. Bitcoin proof of work was resilient to this type of, BlackRock or institutions trying to own as much Bitcoin as possible. But there's only ever going to be 21 million Bitcoin. 20 million of them approximately have been mined. And now the BlackRock ETF holds 696,874 Bitcoin. At the last time I was doing this calculation, that is $74 billion for the spot Bitcoin ETF for BlackRock. And so MicroStrategy and BlackRock are kind of going head to head, but Strategy owns it on its own corporate balance sheet, while BlackRock is holding it for the ETF holders. But also, if you look at their mutual funds, they're putting more and more into their funds in order to protect themselves, because BlackRock, as we go through more in part 2 in macro and in part 3 in geopolitics, is hedging into this multipolar world while turning America into a surveillance technocracy and using warfare in order to reset the world order for the military industrial complex, so that the financial industrial complex can invest in the Build Back Better and loans and reconstruction projects as part of its portfolio. Now approximately 30% of the circulating Bitcoin is held by institutions that we know of. The first one is Satoshi Nakamoto. So Satoshi holds 1.1 million Bitcoin. Now, I personally believe, and one day I'll probably do, let me know in the comments section if you ever like me to do my opinion around who Satoshi is, how it was created, and various technologies certainly has open source libraries like SHA-256 that were created at the intelligence level. And I believe that there was a resistance. No one fully knows. But my personal belief in my research around who Satoshi is, I'm not going to mention it here. I might do a video on it one time. But I personally believe they're no longer with us, and those can't be moved. It doesn't matter if it ever is moved. It will impact price, certainly. But I shared a video, I think it was with somebody that's meant to be a big celebrity, financial guru. And he was saying, I think that Satoshi is spending their Bitcoin and investing in PR and marketing to pump the price while they sell it. Well, we know, if you don't know the way Bitcoin works, we can check everything on the blockchain. That's how we know that Satoshi has these 1.1 million, because they were the original Bitcoins that were mined and they've never moved. And I don't believe those keys can be moved. And various people like Craig Wright over time try to claim that it is theirs or various other things. And he's now in prison for lying and forging documents. But anyway, we know that Satoshi has about 1.1 million. We now know that Strategy has about 597 million, approaching 600,000. And we know from proof of reserves, so exchanges are able to prove their reserves by publishing wallets. And so the largest exchange, for example, Binance, and then some of the ETFs like BlackRock, and also the legacy Grayscale Bitcoin Trust, altogether they own approximately 1.2 million. And so on top of that, we also know that various governments, the largest one being America, but it owes about 100,000 of its Bitcoin to Bitfinex. I'm, full disclosure, a shareholder in Bitfinex alongside 100 other different companies in the sector. But they owe about 100,000. And if they repay what they're meant to pay to Bitfinex, then China would be the largest holder of Bitcoin. Then it would be America. America is trying to build its strategic reserves through Cynthia Lummis' bill. We'll cover a bit of an update on that in the final section of this. And then you go further down. These were all held through confiscations, like the UK. Germany sold off its entire supply. And then you have Ukraine and various other countries that have disclosed it. But we know that countries like, for example, Iran have been engaging in Bitcoin mining, and there was a big correction in the hash power that I covered in the last couple of weeks. And I'm pretty sure that, well, I know through sources that you've got the Kingdom of Bhutan has published their wallet address. Then you have El Salvador, which is buying a Bitcoin every day. And then they haven't announced it, but many countries like Saudi Arabia and UAE have been mining Bitcoin and purchasing Bitcoin, and will be, but they don't necessarily announce it. But of the announced Bitcoin, we know that there's about 850,000 Bitcoin held by government. So we have approximately 30% of Bitcoin held by those institutions that we know. 70% of the approximate, and most of the Bitcoin has been mined, there's only another million left to mine, is held in self-custody or by people that we don't know who they are as well. And so the vast majority of the network is still held in self-custody. And that is the way that we should try to continue that for as long as possible. Not that it necessarily matters, but it's a matrix that we should check, because the Bitcoin custody to self-custody rate is the number of people, or at least the number of Bitcoin value that is owned by people that are going to be sovereign in the future, no matter what the government does, no matter what the bank does, no matter what the leverage ratio is, no matter what these Bitcoin treasury companies do. But that will grow over time as more and more people end up with TradFi tricking them into owning their Bitcoin with them, integrating it with the bank rails as well. And so, as I said, the self-custody side, it makes no difference. But I want my BitcoinHardTalk users to make sure that they're hedging themselves from these custodians as well. They definitely want to own it for you instead of you being free and owning it for yourself. They want your Bitcoin, and they will be using it as collateral in order to offer you loans and all sorts of proof of weapons network products as we usher in these different stablecoin models and various other things. So speaking of public companies, some of the companies that I invested in a long, long time ago, like Robinhood, they had a big conference. They're now a public company. And they listed a suite of other type of crypto and tokenization products. So they're going to be offering ETH staking, Solana staking. We focus on Bitcoin here. They're going to be offering perpetual futures, and they're also going to be doing tokenized US stocks in the European Union. They said that they're tokenizing OpenAI. Essentially what they're doing is they're buying the stock, and then the stock is being represented by a token. But because that token can't come off the exchange, it's a bit of a PR stunt. Where it becomes a bit of a difference is when these stocks are tokenized, and then you can take them off the exchange and then put them between exchanges, like from Robinhood to Coinbase to Kraken to a New York Stock Exchange to the DTCC itself. Then it starts to disintermediate. And we've been working on doing this ever since for a long time, but it's starting to get these large players that want to do that now. Now, remember, these centralized securities, which are very different to Bitcoin, and these stable coins, which are backed by debt, which are very different to Bitcoin, they're going to be ushering in programmable securities and programmable money, which is why we must take a deeper look at what the plan is with the Genius Act, which we've been covering, what the regulators are doing with the SEC side with tokenized securities, as well as what is in the big, beautiful bill. So we'll cover more about that in part 2. Everything's connected. When you start following the money, you get to predict the future because the monetary flows tell you the opposite of what the media. But anyway, Coinbase and custody. I invested in Coinbase a long time ago as private equity, but now as public, they are really heating up the competition. And the more competition, the more innovation that happens here. And now they're competing with the TradFi players. But interestingly, Coinbase has more customers than even a bank like HSBC, which has been around. I mean, it was created as a drug trafficking cartel network to get China addicted to opium. And then it was the bank that was pushing through all the flows of drug dealing that was later rolled up into the CIA and the networks that still push all the drugs today. And the reason that they invaded Afghanistan was to control the poppy seeds so that they could co-opt the Taliban, and then the CIA could work for them so that they can continue to distribute drugs into America. It's so funny how America starts to blame Canada and starts to blame Mexico and starts to blame China when it's actually the CIA. If America wants to deal with its problems, it needs to look inside at the CIA, because that's what these networks were created for. That's what the proof of the weapons network was created for. Human trafficking, drug trafficking, weapons trafficking, and creating war around the world in order to back the dollar through organizations like the IMF. And the system and the proof of weapons network that has now got competition, and the post-World War II Bretton Woods system is starting to enter into this multipolar world order, just as Bitcoin is creating the geopolitical and apolitically neutral mechanism for clearing globally, and being able to audit that globally and be able to transfer it infinitely. Anyway, other companies that are now public, Circle went public, as I said, Exodus went public. This was a self-custody wallet I invested in a long time ago. Circle now got into the stablecoin market. And so more and more options for those that have those legacy pensions that they want to get exposure to this world of Bitcoin AI, CBDCs, and stablecoins, so that you can essentially exit, outperform the system, and then convert that wealth into Bitcoin and self-custody as you make yourself more and more sovereign by understanding the networks and how these go. So speaking of the whole tokenized securities, now the Trump administration has installed a more crypto-friendly, tokenization-friendly. Why? Because that's what BlackRock wants to do. And obviously BlackRock, if you've watched any of my previous episodes, I believe was deeply involved in Operation Choke Point 2.0 through their installed plant, Gary Gensler, who was working with FTX and Sam Bankman-Fried, and also the investigation that should be done into the Federal Reserve and Jerome Powell's role. And based upon these, this proof of weapons network, they crashed the system to rebuild the system to trick you into owning your Bitcoin with them, so that then they can try and catch up and get as much Bitcoin from you as possible, because they're invested in this multipolar world. Once they got the Bitcoin ETF approved, Trump was installed. Trump reset the world order with his tariff policy, which I think was BlackRock's policy. And now we've got all these different capital flows moving, and we'll be covering more about that in the macro and geopolitical section. But now the new SEC chair is a crypto-friendly, securitization-friendly, because BlackRock wants to launch its new exchange based upon tokenization after invested in a company that I invested in many years ago called Securitize, that was building on top of some of these alternative blockchains like ETH. And now their Bitcoin ETF can start staking, so they can control more of the ETH network. And then they can do these tokenized securities. And they invested just before the IPO of Circle into, just before the Circle IPO into Circle. And that's why that is pumping as well. And then they install through the Trump administration a more crypto-friendly environment. And so Paul Atkins says, the chair SEC, tokenization is an innovation and the agency is committed to advancing it. So this is moving at a rapid pace. Now, is America getting caught behind in this whole thing? Because I've covered it many times, the World Liberty Financial Network that the Trump family set up with Steve Witkoff, the envoy for the Middle East, and the work that Cantor Fitzgerald and Howard Lutnick have been doing. I've been covering, how they've been getting themselves ultra rich with Bitcoin. I guess, I haven't got exact figures here, but I estimate the Trump administration, or the Trump family rather, have tripled their net worth through Bitcoin, preparing for this transition as they do deals in the Middle East, back it by their stable coins, get a higher yield that is then paying them more yield on the government debt so that they can buy more Bitcoin, invest more in Bitcoin mining, launch their Bitcoin ETFs and everything else the Trump family have been doing. America still doesn't have its Bitcoin, so it's meant to have a 200,000 strategic reserve. There was an executive order to audit it and find out where it is. And it will be found out that about 100,000 of it belongs to Bitcoin based upon a DOD and a DOJ, hack that happened via the crocodile of Wall Street and her partner in Ukraine. Basically, if those 100,000 are returned, then at the federal level, at the Treasury level, it still doesn't have enough Bitcoin to make any meaningful impact. So Senator Cynthia Lummis has been introducing essentially the bill, which is the Bitcoin Strategic Reserve bill, which allows in a tax neutral way, for example, America to revalue its gold, sell some of its gold, buy Bitcoin, and accumulate Bitcoin in a tax neutral way. It's not allowed to use big, beautiful bill money, for example, or money printing to buy Bitcoin, but it is allowed to do it in a tax neutral or tax way. And in the big, beautiful bill, there was nothing around this. And in fact, the things that Cynthia Lummis put in the big, beautiful bill were taken out. So Cynthia Lummis has now introduced a new bill, and the idea is to exempt tax on crypto for transactions under $300. What this means is that you could end up using Bitcoin, crypto, stable coins as a currency without incurring a taxable event. So one of the reasons that it's not been used as a currency is because imagine you buy some Bitcoin and then the price of that Bitcoin increases, and then you go buy a coffee with that Bitcoin, where you then have to calculate how much capital gains you made on that Bitcoin, and you have to report that and you have to pay some tax on it. And most people find that a hassle because currency is exempt when using it as a medium of exchange. And so this has held back in jurisdictions like America the use of crypto as a currency, even though you have things like Bitcoin debit cards that make it easy. And so the idea behind this bill is to exempt from capital gains transactions under $300, which would allow people to use it as a currency and do those deeper integrations with Bitcoin debit cards, so you can spend your Bitcoin in the Visa and MasterCard legacy network. And that will probably be deeply integrated with stablecoins, which obviously, because stablecoins don't move, they don't incur capital gains. So, whether this happens or not is still going to be interesting things. But anyway, it was taken out of the big, beautiful bill. So in the big, beautiful bill, the most pro-crypto, administration didn't do anything there. But we did have the Genius Act for stablecoins. Then it's going to be market structure next. Who regulates who? CFTC, SEC, OCC, all the different agencies. And then apparently at the end, there may be some Bitcoin strategic reserves for America. And in the meantime, everybody's front running. All of the different countries around the world are front running America, building their Bitcoin strategic reserves. The Middle East are building vast reserves by harnessing their energy. And we've got countries like El Salvador that are able to leapfrog, and the Kingdom of Bhutan, that now 50% of its GDP is Bitcoin, based upon harnessing its water dams and using innovative energy infrastructure in order to harness Bitcoin. But anyway, nothing in the big, beautiful bill for Bitcoin and crypto. But so far, just as a recap, this isn't news, but in case you haven't been following along, 3 states in America allow Bitcoin reserves right now: New Hampshire, Arizona, and Texas. But interestingly, so far, Texas is actually utilizing it and will be buying $10 million worth of Bitcoin. That was announced. I'm not sure if the purchase has been made yet. I'm not sure if it's going to be done via an ETF. I'm not sure if they're going to publish the wallet address like El Salvador does. But anyway, apparently, the first state in America to accumulate Bitcoin has got the bill passed and has now purchased $10 million worth of Bitcoin as it supports the industry for using Bitcoin in order to do curtailment, make its energy grids more efficient, and use different forms of energy utilizing Bitcoin. And now it's putting Bitcoin on the state's balance sheet, which allows it to protect itself as the fiat currency proof of weapons network may end up in a decentralized 52 state network, and it could return to a state banking system, and this could be the collateral as it starts to potentially issue its own stable coins, whatever happens to the world as we enter into this world of Bitcoin AI and central bank digital currencies. Anyway, now, Polymarket, which we covered last week, got a $200 million investment from Founders Fund. Founders Fund is one of those proof of weapons network pundits, Peter Thiel, that got funding from Jeffrey Epstein, and is able to use military technology and is now behind Palantir, which is ushering in the surveillance state that we'll be covering in the macro section in part 2. But now he's invested in Polymarket, and people are speculating. And based upon speculations on the crypto bets that can happen on Polymarket, there is a 93% chance that the US national debt surpasses 38 trillion in 2025 alone. So it went up to 37 trillion. It's now betting that within 2025, it will be at $38 trillion, according to the crypto prediction platform Polymarket. And so based upon that, that's why there is a big rush. Is there going to be bit bonds? Is there going to be a transition? Is this why BlackRock got all of its clients into Bitcoin? And is this why this opportunity to front run as we enter into this multipolar world order, as America essentially gets turned into a technocracy, while the BlackRock can use its capital market as the host in order to usher in capital flows around the world? The director of digital assets, David Sachs, who is also part of the PayPal mafia and is also ushering in the AI, stablecoin, and crypto asset world, he said, we want as much Bitcoin as we can possibly accumulate. Now, we haven't seen that at the federal level yet. We haven't seen the Bitcoin strategic reserve happens yet, but is still giving those signals as everyone front runs as well. And so with that, Bitcoin is corrected a little bit right now, but it reclaims this week its $110,000 mark. The all-time high is approximately $112,000. So we are approaching new all-time highs as the proof of weapons network gets back to business as usual after the tariff policy reset the world order and ushered in this multipolar world. And so with that, we're going to be covering this week in macro in part 2 and the big, beautiful war and surveillance build. Just before we do that, do me a favor. If you enjoyed this, then please, would you head over to YouTube if you're not watching this on YouTube? And we are about 500 subscribers away from 100,000. Once we hit 100,000, YouTube's going to do a review. And at the moment, everything's been organic. They shadow banned me once I started talking about subjects that they didn't want you to hear. Now we've moved into a bit more of a freedom of speech environment because they want the AI to start gobbling up what we're really saying when they build our social credit scores. But nonetheless, as we integrate into this system, once I get past 100,000, they can unshadow ban me, and hopefully I can get past this when they do a review. Just in case during that review things go wrong, follow me on X. I'm over 200,000 followers right now, and I go live on Spaces regularly. You can come up on the stage, ask me a question, and I give real-time updates on X all the time. Follow me over there. I also stream this over there in case it goes wrong on YouTube. In case that ever goes wrong, I also stream this on Rumble. I've got a very small following over there, trying to build it just in case. So please go and follow me over there, and you can watch it on Rumble. And then finally on the podcast, Apple Podcasts. This way you can download it and watch it bit by bit. If the whole episode is too long for you to watch it bit by bit, and you can have it on Spotify if you're an Android person as well. And then you can do it. You can listen to this while you're at the gym, break it into pieces, and do it with no extra time as well. Or you can be watching me live. And then finally, head over to simondixon.com. That's where I post all the new blogs. I just did another one on the Proof of Weapons Network. I'm going to play a little summary from that today in part 3. But if you go over there, you can join my newsletter. You get a login to a completely free Bitcoin Hard Talk membership portal where I back up everything, and you can get exclusive content that's only available over there just by creating a login for yourself completely free. So with that in mind, we're going to jump into part 2. And so do me a favor, help me get to that 100,000 subscribers. Share it, like it, retweet it, put a comment below. Share this with your family. I want more and more people protected for this transition to a world of Bitcoin, AI, and central bank digital currency. So give me a second to refresh my voice while you do that. 1, 2, 3. And we'll move into part 2 this week in macro.